Okay, welcome everybody. Let's keep joining. Let's wait for others to join so that we can start. I want to believe we've been able to open our account and all of that.
Not really.
Okay, we'll look at that. There is the if you follow the video of yesterday's session, you should be able to do that on. So we're waiting for others to join so that we can start. All right. So you will have to go through all of sometimes if you're missing a point. I want to welcome you back to class. So yesterday, yeah, it's recorded. It's recorded. So yesterday we had an introduction kind of stuff, and I said a lot of things anyway. And today we just want to go back to the practice. Okay, so we'll go back to the practice today, and we will focus very seriously on that. Okay, so stay with me. Let me load up my. Okay. So today we'll be looking at the Mt4 interface. Okay. Sorry, the Mt5 interface. So we'll be talking about the Mt5 interface. Yes, yesterday we talked about just the periphery, the most important keywords. But today we'll be looking at the setup model. And let me say this very quickly. As far as trading is concerned, there are three modules or three important categories or areas. The first part is the setup area, or the setup module, if you want to call it that way. The second one is the interpretation module or interpretation phase. And then the third phase or the third module is the application model. What does that mean? Your MT5 must have a setup, okay? Even if you want to use price action, you must understand the definition of the certain patterns of price action you want to use for your analysis. After that, you should be able to interpret that. You'll be able to explain. You should be able to understand all of that. And then number three, then you apply them. When you've gotten the understanding, you'll be able to to apply them. Let me give us another example. Yesterday, I don't know if I said that example. I said, if, for example, you're about going out, you're going somewhere, or you're preparing to go out, and then you begin to experience or you begin to see a cloud cover, distant rumbling of thunder, lightning, and all of sudden. What does that tell you? That there's going to be rainfall, right? It tells you that rain is about to fall. So it gives you an option, a short preparation, time to get your umbrella so that you don't get soaked. So there are certain things that can give us an idea or gives us sign about the market. That thing, those parameters or those elements that gives us information or give us an idea of what the market will likely do or what the market has done in the past and will likely do in the future. Those things are actually called indicators. In other sense, in another sense, it is price action. What is price action? You hear people always say there are two types of traders. It's either you're a price action trader or you're an indicator trader. Well, and let me say this. A lot of people will also say indicator traders, they don't know what they are doing. That price action is key. I agree with you. But I want to let you know that if you can put the two together, you'll be a better trader than just a price action trader. And I'm going to give you a reason why it is not okay to be just a price action trader. If your equity is small, price action trader are suitable for those who have very big volume of equity. Okay, but when you use indicators, indicator will help you. It gives you an idea of some certain things, that some things price action may not be able to reveal immediately, but your indicator can give you an idea. So what I'm going to be doing with us is, I don't just want you to be a price action trader. I want you to combine all this knowledge. So you're going to be an indicator trader along with price action. But we're going to use 90%, or let's say 90, or let's say 85% of price action ideas and just a few of indicator, in this adventure. Okay. So the essence of the indicator is something that will help you to be able to predict the market or to read the market language. Okay. Now I want you to know that the indicator lags, L-A-G-S, indicator lags. What it does is that it does not occur in real time. It cannot tell you what is happening in real time. It is only when that something has passed, it only trails behind something that has passed. So, but it's okay. At least it follows, not immediately. For example, it does not tell you what happens immediately. Price action can tell you that, but indicator will maybe is always like a minute or 2 minutes late. That's why we say it lags behind. It lags. Indicator lags, but it's still useful because it has its own. There's a way you can use it, and it can be very, very useful for your trading. So we're going to do all of that. So for today, I want you to look at. Follow me closely. We're going to set up our MT5, okay, and then we're going to add up a few indicator, not much indicator, just a few, okay, very few indicator, and that's it. So I'm going to share my screen, and then we're going to do that together. So if you are with me, please, I want you to follow closely. All right, so if you're with me, I would like you to use your MT5 at this point, and then you follow closely as well. All right. So first and foremost, after the setup, we're going to go into something deeper. We're going to talk about the candlesticks, anatomy itself. What is the candlestick? What does it represent? And then all of that. So it is important to show you the environment of the MT5 and what it does. So please follow me closely. I'm going to share my screen right away, and then we'll begin to look at it together. Okay. Okay, so oh my God, because these people you see, they will disturb. Sorry for that. So that I won't have pop-ups. Okay, I think that is done. Okay, so we're here. Okay, so if you look at this interface, this is the MT5, the MT5 interface, right? So we have, now I want to begin to explain this interface to you so that you get. Now, these things that are listed here, all of these ones are called instruments, or you call it assets, all of those. The Boom 1000 index, these are different indices, okay? Please don't write on my screen. Thank you very much. Now, we have all of these assets. These are what we trade. You can choose to trade whatever you like, depending on the opportunity it has given you. So these are different assets. So we call, please take note of what I'm going to call them. Please follow. This first icon here is called the quote list icon. Quote list icon. These things are all, these are quotes. All of these you see are quotes actually. So so we call it the quote list icon. This is where you have list of your assets or instruments you wish to trade, right? If we were to trade currencies, you will see Euro, USD, CAD, JPY, and all of that, but we're not trading currency, right? So we're trading indices, and this is what you see. All right. So these are quote lists. The second one is the chart environment. The second one is the chart environment. It tells you that is the second box. Sorry, the second icon, the second one, this one is the chart environment, or you call it the chart interface. This is where you do your analysis and all of that. Okay, fine. The next thing that is important is this one. This one is active transaction. Please take note. This one is called active transaction. What it means is that if you tap here, you will see your active transaction. That is your active, but there is no active transaction right now, so nothing stays there. While this one is your history. This one, that is the next one that has uh, this envelope-like icon, is your history. That is your transaction history. Whatever you've done, that is where you will see. For example, what, excuse me, whatever you've done, that is where it stays. For example, we come here. Okay, so this is the trades for today, for example. Okay, this is transaction history. This was a trade taken today. Of course, this is a real account, of course. So nothing was really done much today. $219 is, of course, is about 115,000 plus by today. So this is your transaction history. I want to go back again. The first one is your quote, list of your assets, where you choose asset you want to trade. Second one is your chart environment, where you do your analysis. All your analysis is done here. The third one is your active transaction. That is to say, if your trades were running, you will see them here. If trades were running now, they will appear here. While the fourth one is your transaction history. Whatever you've done in the past, it will show here. The last two are for our system icons. You don't need them for anything. They're not important. You can look at it. This is news and you don't need it. And this one tells you it has to do with information from your broker. You don't need it. So the only thing you ever need is the first, second, the third, and the fourth one. So that is that. Now, excuse me. How do you add an asset and how do you take out an asset? Please follow me closely. You see, there is a plus here, and then there is a pencil-like button there too. So what you do is, what if I want to remove some assets? I just want 4 assets here. So what I'll do is I will tap on the pencil, right? And then it comes with a delete bucket. I will tap on the delete bucket and begin to choose the assets I don't want. So I don't want this last 2 assets, and I will just tap on the bucket again, and then it is deleted. All right, and then I'll go back. So I have these 4 left. What if I want to add more assets? I will just tap on the plus this time around, not on the pencil, the plus. Plus is for addition, And then I'll begin to choose assets. These are different assets. You know, some of you must have heard of V75. This is where you find them. These are volatility indices. Now, what if I want to add something on step? I can add. I just tap on it and it is added automatically. Step is added. If I want to remove it, I tap on the pencil, remove it, or I can remove the rest of them. Just check mark on the box of what you want to remove. That has been done. So let's go to the second part of it. Now, if you look at this environment, okay, you will see that we have, let me enlarge this so that you see, are you seeing, we have green candle and red candle. We'll be talking about that candle later today. So we have red candle and green candle. That in your own, I'm showing you this so that you get to know what I'm trying to explain. In your own MT5, for being the first time user, there are situations where you will have white and black candle, but you want to change it to red and blue. Sorry, to red and green. The green are the bullish candle, the red are the bearish candle. All right. So if you want to change the color of the candle, that's what you do. You tap anywhere on your screen. Please follow me. You tap anywhere on your screen. When you tap anywhere on your screen, look at this. This is your settings. That icon there, very close to the cross. Excuse me. That's your setting. So you tap on the setting and then you scroll down. You will see colors, customize color scheme. You tap on the color scheme. If you check, you will see something that says bull candle. Look at that, and bear candle. That's the only thing you will have to change in your own case. Make sure that your foreground is black depending and all of that. So you don't, all other colors are normal. You don't need them. Now just change the bull candle color to whatever color you want. These are the color. You just choose the color. If it is, in your own case, the bull candle will be white. If it is white, you change it to green. And then if it is black for the red one, you change it to red. It's as simple as that. When you finish, you tap on done. You are done with that. Then everything will be just as it is. Remember, you can choose any color. The color does not affect whether you are going to make profit or not. The color is just so that you can follow upward. Some people use even yellow and blue, depending. So the color is not important. It doesn't make you a smart trader or a dull trader or something. It's just that conventionally, we understand that green candles are bull candles and red candles are bear candles. Okay, so that is that. So that is how you change the color, but that is not all there is about this environment. So if you check, I'm just doing introduction to this platform so that you see that. Now we're going to be doing majority, 90% of our teaching will be around this environment, just this platform. So, but that is that. So secondly, look at that. If I tap my screen, remember, I'm just tapping the screen. The circular, a frame comes up. Now, I want to explain what all of this represents, starting from the first one. This first one is settings, where you do settings, a lot of settings, of course, about the chart itself. The second one is called the toolbox, where you have to draw trend lines and draw arrows within the stuff. I'm going to show you how we use it. Then from M1 to MN is time frame. That one is time frame. What is time frame? The time it takes for a certain candle to finish forming. So if I place my time frame on M1, it means that after every 1 minute, a new candle is formed. After every 1 minute, a new candle is formed. If I set it on M5, after every 5 minutes, a new candle is formed. Just like that. I'm going to take a study on this, so I'm not going to really dwell much on the time frame. Time frame is a very peculiar thing. When I'm talking about time cycle, trade time cycle, I'll be speaking about time frame very well. So for now, I don't want you to know what it represents. Right now, it is on H1. It means that after every 1 hour, a new candle, a new single candle is formed. So but we'll look deeply into that, but that is not what this is about. I'm just trying to show you the interface. Now, our biggest focus is not in what I've just shown you, is actually here. This is that F. It's called the function, where you have the privilege of adding indicators to your chart and also removing indicators. Okay, so I'm going to show you a few things, and then there's always what I do for my mentees. I've done a video on how to do your setup, so I'm going to just show you 2 examples or 3, and then you will do the rest for yourself, because that is one of the assignments you have to do. Ability to do your MT5 setup by yourself, so that in the future, if something happens to your MT5, or maybe you lost your phone and you want to set it up again, you don't need to begin to look for me. You can do it on your own. So it's something you need to learn, how to set up your MT5. And there's a video for that, and I'll just show you what you need to do and all of that. So I don't want it to be complicated for you. So see what I'm going to show you. If I tap this my screen, first and foremost, look at the, oh, I don't know what, let me show you what I did. I tap my screen, I tap on the F. So when I tap on the F, I had all of this. These are indicators, but I do not rely completely on these indicators, not at all. There's a price action background. So I'm going to teach you how to, marry the both of them together, become a better trader and have an edge over all of that. Okay. So now listen carefully. So we have these moving averages. Of course, there is a video that talks about that, explain. It's on my YouTube. I'm going to send the link to you. You watch it. It's part of the training process. So, but I'm going to explain the moving averages. This is the first one is, okay, I think I should do something like this. Okay, so I'm going to do this. So the first moving average is 9. Please write it in your notes. Write in your note. I have my reason for writing it, because you see, I teach you what I use. So that we have the same settings and all of that. So that when I'm speaking to you, you know where I'm speaking from and why it has to be like that. Excuse me, let me just get something, because there is something I want to show. I want to show you from the scratch. Although the video has explained or everything is simple. So I just want to take note of what I've said. So the first one is the 9 moving average, EMA. EMA means exponential moving average. Okay, so please take note of what I'm doing. I want to delete everything so that you will see what I'm talking about. Then we have 200 EMA, and then don't worry, we're going to do it together. We have 22 EMA exponential, and then we have 10. Don't worry, I'm going to be slow. Okay, and then we have 19 EMA. Okay, 19 simple moving average. And then we have the last one. The last one is, okay, the last one is 50 SMA. All right, and then it's aqua blue. All right, so this is what I'm trying to explain. So I'm going to delete all of that, everything completely gone. So what I'm going to do is, we have this relative strength index, and then hold on. Okay, we have Williams percentage range. Okay, so I'm going to delete everything so that you have exactly, you see that? So that is, I've done, that is deleted. So my chart is completely bare. There are people who use this kind of chart. I'm going to tell you why. As a starter, don't use a naked chart. Your journey of learning will be very long, because there are some things that the moving average and these indicators can help you, determine. If you use a naked chart, a purely naked chart, you must have very big money, and there are some things you will not be able to know, most especially when you deal with entry. So, but these thing we are going to add together, these moving averages will help you. Now, these were all developed by me. All these mix up, these are my own private strategy. Okay. And so there are a lot of things you're going to learn on different assets, how you can trade them. Now, remember what I said in the very first time when we had the first meeting. For some of us who were not there, I had asked us, how much do you want to earn in 1 month? Some people say $2,000. Some people said they want to make $1,000. Some said they want to make $3,000. Somebody said wants to make 1 million every month. Okay, I want to let you know that it is also possible. At the same time, may not be possible. Why will I say this? I'm going to come back to this. I'm using it to explain. I don't teach people how to trade to become a millionaire overnight. It's not a Ponzi scheme. I teach you how to become consistent daily and make little daily. Little daily. A point will come that you gain mastery and you can confidently make $100, $200 within a short time. But until that time comes, however, depending on your equity is the capital you're using to trade with. But until that time comes, what is my biggest recommendation is just make $20 every day, or make $50 as a newbie. Just start with that. $20 every day. Just make $20 every day. make $20 every day. $20 every day now is around 9,000 naira. So you're doing that, and you don't need 24 hours to do that. So these things will help you. This setup will help you to pick your entry within a short time, make that money, and come out of the market. I'm not saying now, please, Mark, quote me, that there will be no, there may be situation where you make losses. But anytime somebody loses money to a point of losing all of his money is because the person is completely ignorant of the market. You can make losses, but you may not close in a loss for that day. You must close with profit every day. That is one of the ways. That is one of the ways you can meet your daily target, and then in the long run, meet your monthly target. So there are a lot of things. I said in the first class, I can teach you how to become profitable, how you can trade and make money, but I will not be able to teach you how to keep your money. Because the problem is, if you have greed, it happens with every human being. I can bet you, it takes a lot of discipline to be able to make $100 and say, I am done for today, you go away. I've trained a lot of people, and I know this is the weaknesses of a lot of them. They will make good money, and they're like, so if it's easy to make this kind of money, let me make more money. And by that time, they are not not reasoning anymore. You know, I don't know how to put it. Their brain is no more normal, as in they are now becoming excited. And with that excitement, they take wrong decision. Market opportunity is not clear. They just want to make money, or they want to make more money. And that's where they get bonds and all of that. So if you can deal with greed, you'll be successful in this business. And then you can tell anybody that truly Forex works. Okay. Or the financial market works. So let's start from the very beginning. So you're going to do the assignment by yourself. I'm just going to explain 2, 3 examples. So what you're going to add is, I want to add a few indicators that will help me to mark my chart. So what I'll do is I will tap anywhere on my screen, the circle will come up again. Where am I going? I'm going to the F, the function. That is one way to go. Another way to go is that I can just simply tap on the F on the screen. If you check, there is an F here. There is an F here. Without necessarily, I could just go there and tap on the F. It will still take me to where I have indicators. Now, the indicator I want to add first is the moving average. So I will just come to where I have moving average, and I will tap on the moving average. Now, this was the last one that was added. I don't need it. So I will just say set to default so that everything returns to normal. The first thing I want to add is the 9th moving average. Please take note. All of these things are in the video. You watch it. So I changed the period to 9. And I say, what kind of moving average? Is it simple, exponential, or is it smooth or linear? And I said it is exponential. So I will just come to method, and I'll come and I tap on exponential. I'm doing this is what we call setup. We're doing setup now. So after exponential, I want the color to be purple in this case. I don't know if it is purple. I have problem with knowing between pink and purple. So please permit me if I say the wrong thing. So I want to choose that color. I think that is purple. And then I want to choose my style, maybe to maybe 3 pixels. 3 pixels is normal. And after that, apply to close. Take note, apply to close. And I say done. As soon as I do that, you will notice that the indicator has been added to the what? To the chart. That indicator has a responsibility, has a role, has a duty to play. So it's not just added for adding sake. We'll get to know, we get there eventually. So after that, I want to add the second moving average. I tap again. I go to the F. This time around, I'm not tapping on the moving average because this one is an existing moving average. This one is already existed. I'm done with that. So I want to add another one. If I tap on this existing moving average, it means I want to edit it or I want to modify the settings, but I don't want to do that. So what I'll do is I will tap on the F plus here on the main chart. I'm sure we are following. Please, this is recorded. You can rewatch it. So I will tap on the F plus. After tapping on the F plus, I will now have a fresh moving average because I want to add a new setting. So I will tap on the moving average. This time around, I will remove the 9. I'm looking for 200 EMA. The color is black, and I love my pixel to be 4. What is the role of 200 EMA? I'm going to talk about it. All of them have responsibility. All of them have the work they do. So after that, I will say done. And the 200 EMA is also added. If you look at it, it's added. Look at the 200 there. Okay. Now, after that 200 has been added, I will now go back and add another one. The same procedure, F plus. And then I want to add the 22. So I will just add the 22 now. 22, still exponential. I will change the color to blue. And then make it 3 pixels. Sorry, to not be too large. And this time around, I will say apply to weighted close. Okay, not apply to close, but weighted close. There are reasons why we use this setting. So we just say done. And if you check, the blue is also added. Okay, fine. So the next thing is I'm going to add the last, another moving average. And then I'm going to add 10. And then I'm going to change the color to, this is applied to close, change the color to red. Please follow me closely. And I will say done, I think. Okay, so it's added. It has responsibility. There is something that will do. Okay, so I've added that. So it's left with 2 important moving average. So I'm going to add another one. So I'll add another one, F plus, tap on the moving average, and then I will change these settings now to 19. Is 19 a simple moving average, apply to low. I'm going to explain all of this high, low, and all of that, what it means. Then I want the color to be ash, maybe something like that. And then 3 pixels is fine. I say done. Look at it, there is added. It's the last one here. This one is added. Okay, it has a rule. It has something it does. So having added that, I will add the last one, the 50 SMA. So I will add the last moving average. There are some time you don't need all of this, but just to help you know how to put up those settings. 50, a simple moving average applied to close. And then I think the color will be, I will use 2 pixel, and then I will use aqua blue. Okay, and then I will say done. Okay, so that is okay. That's all I need. Now, but that is not all there is. I'm going to add a few other indicators. I'm going to tell you what this indicator does. Okay, but we're not going to rely on them. They are just supporting indicators to help us with the market. If you rely only on indicator, you will not do very well. But we're just going to use it as backup. Okay, so it's important. Follow me closely. I'm going to add another one. That's going to be moving average, relative strength index. So I'm done with moving averages. I will tap on the F plus of the main chart, and I will look for what? Relative strength index. Fortunately, in your own case, I don't want to set to default, but in your own case, all you need to do that, your default will be 14, the period will be 14. Just change the 14 to 6, apply to close, change the style to 3, black color. When you come to levels, you can decide to delete. Okay, you can decide to delete. Just tap and delete everything. You can do that. Otherwise, you can also add, you can add more, more levels if you want. But in this case, we don't need any of these levels. So we just delete. We just delete them. 95 cell, 50 weight, 5 by. All of these have their role. So we just change. Just look at what I'm doing. The video explains all of this. And after that, you just say done. It's added. Okay, it's added. So we're going to add the very last thing. Then we continue talking about, the chart itself. Then I will give you the video after the class. You can do your practice. I just needed to show you how to do it. Okay. The video is self-explanatory. Every step of the way will show you how to do it. So the next thing is we're going to add the last one, F plus. I'm going to add a Williams percentage range. And already it is here. The same thing, the video as explained or also has the setup for this one video. So I will just not waste your time. It's already there. I will just say done. So I now have these settings, and this is what I use to make all the money there is that you have to make. Okay, so this is the setup. So let's assume we have the setup. Okay, but the thing is still strange. What is the meaning of all this thing? So we begin to talk about them now. So the video has taken time to explain. Okay, I've taken time to explain in the video the responsibility of each of these indicators. But what I want to talk to us about tonight is the candlestick anatomy. I want you to understand what this candle is doing. What is this candle that is here? What is this red candle? What is this green candle? We said yesterday that green candles are buyers, represent buyers, and the red candles represents the sellers. Okay, so but But let us look at the candlestick anatomy, because you need to understand the anatomy, the skeleton of a candle. What does it mean? What does it mean? So we'll look at that, and then we'll look at what we call support and resistance of the market. It's very important. So when we have this basic knowledge, we can begin to fly. All right. I want you to know that active training is going to last us about a week plus, and then you follow up with videos, after which I've seen your practice. You do some practice. We can get back. We can now get into the community where you'll be mentored for 1 year, where I have to follow up what you're doing for 1 year. And I want to let you know that in the next 1 week from today, you'll be trading. You can trade your real account and making small money. And while you're perfecting, there are some persons have trained for just 3 days and they've gone crazy with it. And I know that if you're smart, I believe that if you're smart and you follow instruction, I don't make things complicated. If you follow simple instruction, this is when to buy, this is when to sell, and this is why you're buying now, and this is why you're selling now, and all of this. If you just follow those instructions and you're not greedy on your own path, you'll be successful. You don't need a lot of stress. It doesn't have to consume your work time. You can do this even while you're working, while you're doing your business, while you're selling your shop, whatever it is. You can do this by the side and still make money, reasonable amount of money anyways. So I'm going to share my whiteboard and begin to explain some things to us. So let's go there. There are a lot of questions. Are you sure you can't see my screen? This is serious. No. It's funny to see. You can't see my screen? Holy Ghost. Oh my goodness. I'm sorry. I should have. Dr. George, you should permit me to share screen. Who can see my screen, please? I want to be sure you saw my screen. Okay, that was earlier. Okay, did you see what I did? Okay. Thank you very much. Okay. All right. I'm so sorry for that. Okay, so let's continue. I'm going to share my whiteboard now, and then we'll begin to talk about it. Just give me 30 seconds. 30 seconds. Can you see my whiteboard? Can you see my whiteboard? Anybody there? I want to be sure you can see my whiteboard. All right, thank you very much. Okay, so let's continue. All right, so sorry about that. So let's continue. So I'm going to be explaining to us the candlestick anatomy. Candlestick anatomy. I want you to know that as soon as you start trading, you become a candle. Do you understand what I'm saying now? The day you start trading and you enter the market, you also become a candle. I gave us an illustration yesterday. I said, using Balogun market in Lagos. If, for example, there are 10,000 people in that market, and you are just coming to the market, and maybe the market is enclosed, and they ask you, say, how many people are buying inside this market? It will be difficult to know. They say, okay, how many persons are selling? But what if there was a screen that if somebody buys, it now indicates that one person just bought now. If somebody sold, the number will just go. Maybe 2 people sold, the number will be showing 2 as a screen. Now 20 persons bought, it will now show 20B or 20 buyers, just like that. So you don't necessarily need to see the people in the market. You don't need to see the man or the woman there. All you see are numbers displayed on the screen, interpreting what is happening in the market. That is what the candle is. So the day you join trading, you have become a candle. The question is, are you a green candle or a red candle? You can be any of them, depending on what you're doing at the time. So that is how these data are collected. If we say we have 1 million traders right now, it's because you are also part of the number. And remember that traders are distinguished into two categories, buyers and sellers. So the question is, what candle do you represent? Are you a buyer or are you a seller? So in the day, from the day you become a trader, if you are a candle, you have become a candlestick. All right. So let us begin to look at, let's define this candlestick. Let's look at the anatomy of a candlestick. Let us see it, okay, so that you get to understand, because this part is very important for you as a trader. So I'm going to draw. So that is a candle. Now, and then I'm going to do this. Please just follow me closely. So this is a green candle. And this one is a red candle. That's a red candle. So what about a candle? You need to know what happens to a candle. So please write it in your notes or by the side that a green candle opens at the bottom. You see that place I just drew that line? That's the open of a green candle and closes at the top. That place. So this is O and this is C. That's for a green candle. A red candle opens at the top and closes at the bottom. Please just write it or just draw the same thing so that you will remember. These things, this information will help you in your analysis tomorrow. So we're just coming up. We're not gotten into the main things yet, the very crucial stuff. So we are still building up, we're still coming up. So now every candle, not every necessarily, candles will always have what we call high. That place is H. This place here is L, the low of that candle. I'm going to explain how we have the high and then how we have the low. So that is the high of the candle, the low. This one, this is the high too, and this is the low of the candle. Now, this thing you see here, this thing that causes us to have the low is called wick, W-I-C-K. You can call it wick, you can call it shadow. Okay, I'm going to show you in the real trades what it is so that you get to know. That this candle has a wick, both upside and downside. That wick is actually what gives room to a low or to a high, depending. Now, this is the body of the candle. The whole of that blocks is the body of the candle. Okay, that is the body of the candle. Excuse me. Okay, so this is what we call candlestick anatomy. I want to say it again. A green candle opens at the bottom, closes at the top. A red candle opens at the top, closes at the bottom. What is the significance of that information? Very, very important. You'll get to know as we make progress. So I just want you to have an idea of this. Now, let me illustrate how we have the high and the low. Let's assume that this place was 10, and this is 9, and this is 8. Always a problem to write 8. And that was 8. So we have 10, 9, 8. So this we now have 2 here, assuming. So now the candle started to, well, we want to start with a let's start with a green candle. A green candle opens at the bottom, closes at the top. So a green candle starts opening here at 2 and went up to 9. Please understand what I'm trying to explain. Went up to 9. Okay, remember a green candle opens at the bottom, closes at the top, but the candle was still forming. It had not closed. What we mean by close is that this one candle has finished total formation. Another candle has started, so we are done with the previous candle, but this one has not finished the formation. Look at what happened. When the candle was opening, it was able to grow up to 9. Maybe from 2, it grew to 9. I'm just illustrating something. But before let's assume it's a 1 hour candle. Before 1 hour completes or elapses for this candle to finish forming, it had gone down from 9 where it stopped to, this is 7. It had gone down from 9 and it stopped at 7. Remember that initially the candle had grown to what? 9. But by the time the candle finished forming, it finished forming or closed at 7. Because of the fact that it had touched 9 area before, it's going to give you a wick. That is how the wicks are formed. What it means is that anytime you see a wick on a candle, and this is the body of the candle, this one, what it tells you is that you see where this wick stopped was where the body, the full body was at the time, but it couldn't close there. It retraced. Oh, I'm using a big word now. It came down again and ended the journey at 7. So the fact that's why we say it opened here, it closed here. So this become the high it got. It got to that high. The high it could get to was 9, but it did not close at 9. It rejected at that 9 and closed at 7. Am I making sense? I'm just trying to explain to you how come we have the high and the low. The high and low is as a result of rejection, price rejection. Please write it in your notes. Highs and lows of candles are formed as a result of price rejections at those levels. This information is important. It will help you as we make progress. So the fact that this candle was at a point was at 9, but it couldn't end the journey at 9. It ended the journey at 7. There must be something that will record, that will keep as history that, look, this particular candle was sometime here. That thing that we draw that line or we mark it is called wick. That is the wick here. This is that thing. That's the wick. That's the wick that carries high. Or if, for example, it was a bearish candle and it came down to maybe 7, opposite, and maybe it came down to 2 and could not end the journey at 2, but pull back to maybe 6, is going to have something like this. You're going to see something like this. It will end the journey at 6, and because it was sometime at 2, it will trail to and call it. That was the lowest it got to. If it is coming down, it's going to form a low if a particular price is rejected. If it was going up, it's going to form a high if a particular price at where it stopped was rejected. So that is just the idea behind a candlestick forming high and low. What's the significance of the high and low? It's important. I'm not going to talk about it in this class now because it is very important. It's a key information you need also. So I don't want to just bumble everything. I have a module I am following. So that is all you need to know for now about candlestick anatomy. We're going to go deeper into candlesticks anatomy, candlestick language, candlestick mathematics necessarily. I'm not going to teach you something that you will not use to make money. Whatever I'm going to teach you, whatever information I'm going to give you in the course of this training is something you will need almost immediately to make money. The things that are not important, I will not bring it here. You can read that one on your own for just maybe extra knowledge. Whatever I'm going to teach you, everything that is part of my syllabus for this training is what you really need to make money. And that's the truth. So you may not have a long time class. It's just straight to the point. That's what I do. Because the goal is that you make money. That's it. So that is what this is about. So that is that for now. I want to talk about resistance and support. Very important in the trading industry. You always hear people say resistance and support. What is resistance? What is support? Please write it in your notes. What is resistance? What is support? Resistance is an area. Resistance is a price area. It's an upward price area. Please write it, upward price area, where market faces a barrier or where price faces a barrier to break through. It's an upward market area where price or market faces a barrier to break through. What does that mean? Look at it. You know, if you're in your room, your ceiling is a resistance as far as the forex or the trading environment is concerned. You know, if you're trying to jump, something pushes you back. You know, there is something, maybe there is a wall, you know, ahead of you. You're trying to go, you're going trying to go up, but there is a certain pressure that says you can't keep going down. It pushes you down. Anything that does not allow you to flow, any barrier you have going upwards, right, is resistance. Resistance. In the trading environment, we call it resistance. Anything that does not allow you to go down, it pushes you up. You're trying to come down like this, but there is a barrier. It doesn't allow you to pass that line or that area. You say you can't. This is called support. And why the one on top is called resistance. These are two important areas. I want to take time to explain this. Listen carefully. I'm going to go a little bit deeper on this. Do you know that a lot of people don't really, a lot of traders, in fact, some of them they've traded for 10 years. I've met some persons that have traded for a number of years, and they don't really understand. They can draw resistance and support, but they don't know that there is a psychology. There is some very serious stuff behind the resistance and support. Let me reveal this to you, that the resistance and support is the most important area in the market. You know why it is important? It's not because that is where price bounces or where price faces a challenge. It is because that is where majority of the orders are. You get it? Let me explain. It is conventionally said. You always see people say, sell at resistance, buy at support. Because if you're going up and there is a barrier, it means that the market is not going to go up again. It's going to start coming down. So why don't you sell from where you have pressure telling you not to go up? Why, when you're going down like this, you cannot pass? So why don't you start buying from there? So because of this general ideology that you should sell at resistance, which of course is not wrong, but the application is what is the problem, or when to is really the problem now. So if there's a general idea that you should sell at resistance and buy at support, of course, and because of that, remember what I said yesterday, market makers, institutional makers, the money guys, the guys that has the money, their focus is not what happens in the real body of the market around here. They're not interested. They are interested, they are waiting for you, the retail trader, who will want to come and say, okay, this is a support, a verified support. So let me begin to place my buy here. So a lot of orders, that is where all the money in the trading environment or in the trading industry are, or majority of the money. We call it order, O-R-D-E-R. When you want to place the trade, you buy an asset, what you do, you are placing an order. So a lot of orders are located within the resistance and support. You know why? Because of that general knowledge that you should sell at resistance and buy at support. So the big guys knows that all the retailers' money will be within that region. So that is where they manipulate market. That's why as we go on, you hear people say, for you, if you understand trading before, you hear people talk about false breakout. We're going to talk about all that. False breakout can never happen in the middle of the market. It has never. You can quote me anywhere. False breakout always happen in resistance or support area. Why is it called a false breakout? Because that is not the original direction, the original intention of the move. It is actually a move triggered just to clear your positions and take all your money before the market moves in the original direction. So we call it false breakout. False breakout is not supposed to be like that. But what triggered that is because there are so many millions of orders there. And these big guys, they want to trap that your little money. So you see that even in the real trading environment, the rich wants to keep getting richer. They want to keep oppressing the poor or the retailers in quote. So that is why you need to be very, very careful. You need to have a good knowledge of how to navigate your way around the resistance and support. And to the glory of God, there is a way around it so that you don't get trapped. You don't allow your order to get trapped. So what is resistance? I'm going to explain again. So resistance is the upward market movement where market or price is likely to meet a barrier upwards. So market is going up, but meets a certain barrier. It can't come down. That zone, that area where price will always go and hit and cannot break it. It will hit. that place is termed a resistance. Okay. Now, if it's coming down and cannot also break and keep dancing, it's called a support. Don't forget it. Support and resistance. Resistance are the one on top, support are the one at the bottom. That is at the one at the bottom. So that is what is. So how do you make use of these areas? How do you make use of these areas? Please, I want you to write down what I want to say now. That the markets respect history, and history always repeats itself. The market respects what? History, and history always repeats itself. If you know that, you will know a lot of things the market will do. Because actually, let me explain what that means. Okay, technical definition of support. Support is a downward. Okay, let me put it this way. There is really no real definition. So that definition is just my own definition. I just want to explain. Support is an area, a downward movement of price where there is a barrier going down. Downward movement of price where price has refused to break through downwards. That should say there is a barrier at the bottom. Downward movement of price where there is a barrier to break through downwards. So there is a barrier at the bottom. It cannot break through. It cannot go down. That's a support. Anywhere at the bottom where price has refused to break through is support. Just put it that way. Okay, so that is what it is about, and it's important to know. Okay, having said that, excuse me, I was talking about before I was interrupted. What did I say? Okay, I was talking about support and resistance, and then, oh no, remind me. The last thing I was saying before I had to define that. I just want to know where I lost it. Okay. All right. Okay, so I was talking about the support and the resistance level. Okay, I was talking about market respect history, and history always repeats itself. Now, I said if you have that understanding and if you know that, you will be able to understand. And let me explain. Yes, let me explain why that happens. I want you to know that. Let me explain that concept of history. So look at that. So maybe 3 months ago, price was at this level and couldn't break and came down. This has become an history point. That place is marked. Then 2 weeks or thereabout, price comes back to that same level and could not break. That becomes another history point too. The fact that that two levels could not be broken after a long period of time, the next time price will go there, it will definitely respect that point. Say, previously, this point is a strong point. It was respected. It's not going to be easy to break it. So it will also dance and come back. That area where history always repeats. What kind of history? Price rejection. Because that's what it means. The history that is repeated and that is respected is price rejection. Because actually, all of these things are prices. But let's assume this price was 100, 105 for any reason. Every time price gets to 105 or a candle or market is moving to 105 level or price level, it says it can't pass the 105. It keeps coming down. It has been doing that maybe 2 weeks ago. What you do as a trader is you mark that place. That's a place of history. Because every time price will always get back to that place, it will always bring it back. So those areas of history are what we call trigger points for entries. That is where you begin to take decision. In this case, you begin to look for sell opportunity if the history is repeated at the high level, that is at the top, or you begin to look for buy positions if the history is repeating at the bottom level. That's why it is now said that, so in conclusion, what am I trying to say? Those places where price rejects from time to time, every time price gets there, it rejects, are what forms the history. And because it has happened before, it's going to happen again. History repeats. It's a common thing in the industry. Okay? All right. So these are very important. And when these things happen, you mark those things become key levels. We call it history points. They become key levels. You will use it in the future to make judgments or to decide how you want to trade. So that is very important. Don't forget this thing that I'm saying now. We're going to continue to talk more about it. So I'm going to stop here for tonight and attend to questions. Whatever questions you have to ask concerning what we did yesterday and today. Please feel free to ask this question. I don't want to rush us and just pack us with a lot of things. I want to take it very easy. It's a journey so that you get everything. So if you have any question, please feel free to ask your question now. Send me a chat and then we'll answer your question. Thank you very much. Please feel free to ask any question wherever you don't understand, whatever it is you don't understand about this. And then I'm going to explain. Okay, very good. Somebody is saying, how do one know those points of history? Good. Another question, please. Let me explain. Look at my chart. How do one know those points of history? You know it with your eyes. Now look at it. So it's simply by observation. You mark them. How do you observe? You discover that every time price gets to a particular place, it couldn't break. And then after a while, it comes back to that same place, it couldn't break. And then after a while, it came back. This can happen within 1 day, can happen in 3 days, can happen in a week's time, depending on the time frame you're using. We're going to talk about time frame tomorrow. So the thing keeps, as soon as you notice that why is it that every time market gets to here, it does not, it bounces off. What you do is that after first and second bounce, this and this, you mark that point. What that means is that is a place of history, and the place of history is either a resistance or support. The place of history where price always rejects, where things will always happen, is either resistance or support. So what you do is that you mark those areas, because those areas are key levels you will use in your trade entry and of course in your analysis. So that is how you determine those history places. It's just by observation that, okay, you now draw a line. I'm going to show you how to draw resistance line and support line, the accurate way, the real way, not what you watch on YouTube, the real way, and why we draw it like that. So that is that. I don't know if I've answered your question. It's simply by observation that, why is it that every time price gets here, it keeps doing like this? Okay, so you mark it and then you observe what happens next. So that's how it is. Yes, the recording will be converted and sent to you tonight by God's grace. So that is that. Any other question, please? Do we all understand what I've said so far? Please let me be sure that you understand. Sometimes I feel that I am too fast. But if I am, please draw my attention, then I will try and be slow. But if you understand everything I've said tonight, please let me know that you understand. At least let me just be sure that you got this today. I'm waiting for a response. Is it clear, please? Did we understand anything so far? I've said what I've said. It's going to become more clearer as we make progress. So, but please, let's not forget what I've said. I'm going to send us a video to watch on how to set up your indicator. Just set up your charts and then just follow the instruction. It's clear. It should be your first assignment. Okay, somebody's asking very quickly. He said, yesterday I spoke about 3 kinds of market. Please, can you throw more light on that? Yes. All right, so we have 3 types, or I was explaining 3 types of markets. I said number 1, we have a bullish market, that is green candles that are going up. And then we have a bearish market, candles that are going down. Basically, there are supposed to be 2 types of market. But the question is, what if the market is not going up, it's not going down? And I'll say that is the 3rd kind of market. We call it a choppy market, CHOPPY. the choppy market, or you call it the consolidation market, or you call it the ranging market, or you call it the sideways market. That is, you have equal numbers of buyers. It's not buying, it's not selling. The market is not going up, it's not coming down. And please, let me say this emphatically. Don't trade in a ranging market. I gave reason. You can go back to the video of yesterday. I gave reason why you should not trade in a ranging market, because mostly every ranging market comes with a massive breakout. And one thing is for sure, you may not know the direction of the breakout, because what actually induces or triggers such breakout is as a result of the number of order. And the market makers, the institutional traders, will not do something that will favor you. They want to take that part of your money. So they will want to move the market against your order so that they can trap your money. That's why when you are in a range, be very careful. Don't trade. And that's why it is said, trade with the trend. Never go against the trend. I took time to explain to you what trend means in the real language of the market. It means volume of money. Because what pushes the market is money, is volume. So, but when institutional traders have withdrawn their money at a time, they are not trading at a time, the market goes into a state of ranging. Volatility becomes low. At that time, liquidity is low too. The market does not run faster, it's not flowing. And so they are trying to collect order. They are trying to trap retail traders to set orders. By the time they set a good amount of money, they now come with their money and push the market against them. So please, I want us to take note. So that is the three types of market we have, but there are only two you can trade, either a bearish market or a bullish market. You can't trade a choppy market because it is an uncertain market. Yes, you will have the YouTube. You will have the YouTube video. You have all of this. So please, I'm going to send a link of the video to you. You watch it. And then please don't be tempted to watch other videos yet, so that you don't go faster than me. All right. But just watch what I give. As we make progress, you're going to get to watch other videos and all of that. Okay, somebody's asking. He said, if we have three types of market, when the market is consolidated, you advise not to trade. Does that make me a spectator? Yes, for that time, you're a spectator. You are just watching. You're watching to take a decision. So that is just, you're a spectator. You're a spectator in that regard. In a range market, if you decide to prove stubbornness to trade and the trade went against you, you can withdraw. Can you withdraw your trade? Yes, you can close your trade, but you would have closed in a loss. You can close your trade. That's why this is better than binary option. Binary option is one way in, one way out. When you go in, until that trade is finalized, you cannot withdraw your money. You cannot come out of it. That's why I was telling us the other time during the presentation that don't trade binary option. That one is gambling. When you go in, you've gone in. Something must happen. There are two outcomes. Either you lose or you win. You cannot help yourself. You cannot minimize your loss. You know, if you put $100 to trade, that $100 must either give you more money or you lose all of the $100. So you can't do that. So binary option is a no. That is not trading. But this one is, even when you've made a mistake, you can correct that mistake. You can minimize your loss. You can place stop losses. You can apply risk management and all of that. So don't worry, we are going to get to all of this. And I want to assure you that trading is simple. Yes, people have really said a lot of bad things about it, but it's simple. You too, you can do it. And by the time we're done with this class, you'll be grateful to yourself that you took this course, and it's going to be worth it. So thank you very much. In the absence of more questions, thank you very much. Dr. George will send the recording to the group, and then I'll send the practice video for the setup. Yes, you can practice all of this with demo account. And that was why yesterday we took time to set up demo account. So please, we're not going to start practicing yet. So, but what you're going to do is to set this up in your demo. Of course, you need demo to do it. So thank you very much. For those of us who were not able to do it yesterday, please watch the first video. You'll be able to set up your account, set up your demo, and then get started. Thank you very much and good night.